And welcome back, financial advisor Joe Spurgeon, who's here to talk about bonds.
We've had a lot of drops in bonds and bond funds, and that's been kind of perplexing to people because the stock market is going up, but bonds and stocks do not correlate. And one of the problems that we've had is we have downward selling pressure. We have people trying to get out of bonds because they think interest rates are going to rise. So we have that selling pressure. We have less demand. Some people misinterpreted the Fed last week. They didn't say they were going to raise interest rates, but they did talk about tapering and buying fewer bonds. And so when that happens, the price is going to go down a little bit. If you are seeing a drop in your bonds or bond funds and you have an issue with that, you might want to look at short duration bonds or bond funds. And those aren't going to pay as well. You know, those don't pay as well as those longer term bonds, but you shouldn't see the price fluctuation in those that we have in the last 6 months with the bonds and bond funds.
And I used to always think of bonds as so safe and so steady, but it seems like things have just flip-flopped.
In a rising interest rate environment, which is what we might be running into, you can see bonds and bond funds lose value. And that is so frustrating because people can't get a good CD rate or savings account rate, and they're looking for a place for their fixed income, and now we're seeing losses in bond and bond funds. And for those people that are looking for that income, it's just devastating.
All right, Joe, thanks for being here. If you have a question for Joe, all you have to do is email him at onthemoney@ktvl.com or call him at 541-665-2732.